Friday, March 27th, 3:15 p.m. New York time. Welcome back, investors, to Winning Wall Street's Money. U.S. dollar index. Got to do a top-down, multiple time frames. Doing this to determine if I want to trade bullish, trade bearish, add to my current positions, sit on the sidelines. For the past 2 weeks, about 2 weeks, I've been doing dollar cost average, trading bearish the U.S. dollar. So now that we're at the end of the week, last full week of the month, coming into finishing the first quarter of the year next week. If you don't know, the U.S. dollar, commodities are priced in U.S. dollar. Typically, when the Fed raises interest rates, yields, U.S. dollar goes stronger. And there's petrodollars. So there's multiple situations occurring that are making the dollar strong. One, again, before the war started in Iran, the U.S. had a situation of inflation creeping in. And to fight inflation, you don't want to lower your interest rates. You also want to curtail, get in line, stop spending, borrowing more. Well, the United States, last Wednesday, the Federal Reserve met, voted. Good job out of them not lowering the interest rates. They should be raising interest rates. I've said that multiple times. Well, Congress writes the check, President signs the check. Last week, the U.S. debt broke $39 trillion, as well as the current situation with the war, overspending. More people are buying oil. Got to convert your currencies into U.S. dollar, giving a bullish bias to the U.S. dollar, adding more inflation. Again, next week, the monthly candle will be done. This is a 20-year chart. Each candle is a month. Bottom left, the low of the U.S. dollar, 2008. And the top right, the high of 2022. I think I'm going to make that brighter. There we go. So huge trading range. You see how the dollar's been. But now the current dollar from the highs are trending down. Got it? So again, the low, 2008. The high, 2022. A lot of things occurred over those 20 years. Zoom in here. The high of last year, 2025, the decline started in the U.S. dollar and interest rates were being reduced. Consolidation phase. First month of the year, you made that lower low, which was the low here, 2026. Then the February, last month was that inside candle. This month, we broke above that inside candle, making a new high for this year, also breaking this swing high here. So the current momentum on the monthly is up. This yellow candle, big wick there, midpoint. That's a considering key level right there. See what happens if and when we go in there. The weekly chart. Again, last year was the markdown phase. Here's the low of the year. That was a bullish pin bar. It wasn't truly tested, but that red candle came off close to it. After that, we did that reversal. So I'm going to still keep this here, the zone off that big till. Again, that trend did reverse, so this may have less valid here. May not be tested on the downside, may just one day go right through it. We had this consolidation here, inside candle. From that inside candle, big, strong green candle went up on this weekly, which broke above there. That big impulse move down. So that yellow candle at the top, the bottom of that green candle, imbalance area. Those never overlap. So I have the here as a zone. Now the current situation, let me zoom in some more. See, last week was that yellow candle. It was a solid body equivalent to a red. We've been making lower highs. Even this week, lower high and lower lows. So the weekly, the trend's down. Big wicks on the bottom of all three of these candles. Buyers stepping in there on the bottom. So it's basically building a wedge. And then a wedge builds a coil getting tighter, tighter, tighter. Again, this week, we made a lower low, lower high. See? That's a wedge. Coming into later as a flag, maybe. Yep. So on the top, you notice getting lower highs. There are less people willing to buy at those highs. So the decline. But again, the buyer's stepping down here in the bottom, still holding it up strong. So it could go here for consolidation for a while. This is what I'm considering, again, staying, not necessarily adding today more bearish buys positions, but staying in my current position size, bearish on the dollar. Now we're on the daily. Yeah, staircase pattern higher high. And this was a steep retracement. So see that big red candle here? Big wick in the bottom of that swing point, and the top, which I labeled. Today we broke it. Futures don't close for another hour and 40 minutes, give or take. Getting the trends up. And that big yellow wick, that big green candle, did that reversal. So I have here midpoint of this green candle. But I think it's less relevant. Gotta remove that. And this is what's valid. I'm gonna do it now. The top of this green candle, the bottom of that green candle, they're not overlapping, so it's an imbalance area. So right now it's key. Bullish buys the dollar. But I'm sitting on hands, watching. Maybe it's going to be next week because we're coming to the end of the month. Or maybe I'll have a sweet spot to see, add some more bearish positions. If it doesn't work out, I'll be closing my bearish positions. Doesn't mean necessarily I'm going long. Okay, intraday 4 hours. Put this on 10 days. This orange vertical line, let's give you some more space here. There we go, 10 days, 4 hours. This orange vertical line is when the Federal Reserve met that last Wednesday. Yep, so interesting. Look at that. That was last Friday. That was the Friday from last time or 2 weeks ago. That Friday high, they ran it up the dollar, making this swing point. And from that Friday, they ran it down into Wednesday morning, reversed into that Federal Reserve meeting. Big move up, filled to maintain momentum to the upside. Rollover. So again, I've been adding bearish positions on US dollar this week, as well as the these 3 weeks here. And then this this red candle, huge wake up, broke above this imbalance area here. Massive rejection, giving me more bearish bias. So I added more bearish positions on the dollar. Well, look at this. We're going up, slow grind, small little bodies. Again, look at these big red candles, how the length of them, more bearish. And the grind up is slow. Again, we broke this right here. And the current candle would be done at the close of market here. But this bullish pin bar here, that's strong. Coming into this weekend makes sense. Yep. All right, we'll take this to the hourly, then we'll be done. There we are on the hourly. Right here, it was in balance area, which is, that's what I want to show you right here. So this big red candle down, impulse move down, and that was a swing high. I labeled it. It took several days to get up there and test. So today it was nice. It got tested, broke above it here. Retracement, imbalance area. On the 5-minute, this is a good setup for the bullish position that was taken. And then here, right now, it's done. So again, these setups on the higher time frame and looking for the entries on the lower time frame. Let's put this on the 15-minute. There we go, on the 15-minute too. Again, this imbalance area is off the 1 hour. Again, you see, look at these pin bars. They broke in here, tested this. And then each of those big long ones were showing buyers are stepping in. Or where would one go long? Again, this is a 15-minute. You could take this to the lower time frame. Look for the sweet spot. Get strong move up here. Minor retest here. Nice. Again, the setup was on the higher time frame and the entry, the lower time frame. Worked out very good. Thank you as always spending a little time with me. That's it for the video. Thank you for watching. Thank you for your support.